Hello and welcome. It's almost impossible to go a day without hearing something about cryptocurrency. The headlines are always extreme. Either it's a revolutionary technology that will change the world, or it's a speculative bubble for criminals and gamblers. With so much noise, hype, and fear, how is a normal person supposed to know what's real? Is Bitcoin digital gold or a worthless scam? Is blockchain a transformative invention or just a buzzword? If you've been curious but confused, you're in the right place. In this video, we're cutting through all the hype. We're going to explain the core technology of blockchain in simple terms, demystify what Bitcoin actually is, and give you a realistic, clear-eyed view of the potential and the pitfalls of the crypto world. This isn't about telling you to buy or sell anything. It's about giving you the knowledge to understand one of the most discussed topics in finance today. So, let's get started. Before we can even talk about Bitcoin or any other cryptocurrency, we have to understand the technology that powers it all, blockchain. Now, forget all the complex jargon for a moment. At its very heart, a blockchain is just a new type of database for recording information. But it has three special properties that make it totally unique. Imagine a public, digital notebook that everyone can see, used to record transactions. The first special property is decentralization. Normally, a notebook like this is kept by one single entity, like a bank. They are in charge of it, and you have to trust them to record everything correctly. But a blockchain is a notebook that isn't kept by any single company or government. Instead, it's copied and distributed across a massive network of thousands of computers all over the world. This is what we mean by decentralized. There's no single point of failure and no one central authority in control. The second property is transparency and immutability. Every time a new page of transactions, which is called a block, is added to the notebook or the chain, it's linked to the previous page using a complex cryptographic code. If you try to go back and alter a transaction on a previous page, that code breaks and the entire network knows something is wrong. This makes the ledger essentially tamper-proof. The record is permanent, or what we call immutable, and the third property, which is the most revolutionary part, is that it's trustless. Because the system is decentralized and secure, you don't need to trust a middleman like a bank or a payment processor. You can trust the system itself, the code, and the network enforce the rules automatically. So, to put it all together, a blockchain is a decentralized, transparent, and tamper-proof digital ledger. It has a new way for people who do not know or trust each other to agree on a set of facts without needing a referee in the middle. Now, let's talk about the first and most famous use of blockchain technology, Bitcoin. Bitcoin, created back in 2009 by the anonymous Satoshi Nakamoto, is essentially the first successful application ever to run on a blockchain. You can think of the Bitcoin blockchain as that decentralized notebook we just talked about, and Bitcoin, the currency, as the actual entries being recorded in it. Bitcoin was designed with a very specific purpose, to be a decentralized digital cash system. It aimed to allow people to send payments to each other directly, peer-to-peer, without needing a bank to process the transaction. But how does it actually work? Let's break down to key concepts. First is mining. This is the process of adding new pages or blocks to the digital notebook. Computers on the network, which we call miners, compete to solve a very complex math problem. The first one to solve it gets the right to add the new block of transactions to the chain, and as a reward, they receive newly created bitcoins. This whole process secures the network and controls the creation of new coins in a predictable way. The second key concept is digital scarcity. Unlike regular money, which central banks can print more of whenever they want, Bitcoin has a fixed supply. There will only ever be 21 million bitcoins created. That's it. This built-in scarcity is exactly why its supporters often call it digital gold. They see it as a store of value, something that's immune to the inflation that can devalue government-issued currencies over time. So, is it really digital gold? Supporters will point to its fixed supply and its decentralization, but critics point to its extreme price volatility, its very high energy consumption from the mining process, and the fact that, so far, it's been used much more for speculation than it has for everyday purchases. The truth is, it's still a global experiment, and its ultimate role in our financial system is still being defined. Bitcoin may have started it all, but it opened the floodgates. Today, There are thousands of other cryptocurrencies, often called altcoins, but they aren't all trying to be digital cash like Bitcoin. The crypto universe has expanded into several key categories. First, you have smart contract platforms, and Ethereum is the biggest one. If Bitcoin's blockchain is like a simple calculator that only does one thing, which is process payments, then you can think of the Ethereum blockchain as a smartphone. It's a blockchain that can run all kinds of different applications. These are called decentralized apps or dApps, and they run on something called smart contracts, which are basically self-executing contracts with the terms written directly into code. This technology enables things like DeFi, which stands for decentralized finance, and NFTs. Next, you have stablecoins like USDC or Tether. These are cryptocurrencies whose value is pegged to a stable asset, like the US dollar. They aim to combine the instant processing and security of crypto with the stable value of traditional currency. This makes them really useful for trading and transferring value without the wild price swings of Bitcoin. And then there are meme coins like Dogecoin or Shiba Inu. These are often created as jokes or as part of internet culture. They typically have no fundamental utility or technology behind them and are driven purely by community hype and speculation. They represent the absolute riskiest and most speculative part of the entire crypto market. And this brings us to a crucial reality check: the risks and the volatility. It is absolutely vital to understand that this is a highly speculative, high-risk asset class. Extreme volatility is normal. It's common for crypto prices to swing 20% or more in a single day. There's also huge regulatory uncertainty. Governments around the world are still figuring out how to regulate crypto, and new rules could significantly impact its value overnight. And then there are the security risks. While the blockchain itself is very secure, the exchanges where you buy crypto and the digital wallets where you store it can be hacked. There is no FDIC insurance like you have with a bank. And finally, the space is absolutely filled with get-rich-quick schemes and fraudulent projects. If you ever choose to invest, you should only allocate a very small portion of your portfolio that you are fully prepared to lose. So, let's do a quick final recap. What is blockchain? It's a decentralized, transparent, and secure digital ledger. It's a new way to record and verify information without a middleman. What is Bitcoin? It's the first successful cryptocurrency, a decentralized digital payment system, and a potential store of value, often called digital gold. And what's the reality of it all? Crypto is a fascinating technological experiment with revolutionary potential, but it remains a highly speculative and volatile asset class, filled with both huge opportunity and massive risk. The underlying technology, blockchain, is likely here to stay and may find profound uses in finance, supply chains, and digital identity in the years to come. But as an investment for the average person, it's crucial to approach with extreme caution, deep research, and a very clear understanding of the risks involved. Never invest in what you don't understand. And after watching this video, you now understand a whole lot more. Thanks for watching, and be sure to subscribe for more clear explanations on the topics that matter.